What's going on?
Hey. Thank you very much, Scott. Steve, how's it going? Happy Monday.
Hello. Hello. Happy Monday, Jamie.
And
Thank you.
everybody, thanks for attending and welcome to the first Monday of June. June is upon us, and I guess it's not it's not officially summer yet. I think that comes a little bit later, but wow, here we are in June already. The year is just about half over. So before we get started today, I want to take care of the lawyers and just make sure that everybody is aware that all the information that we share with you here today, as well as any other webinar, strictly for educational purposes only. If you do need investment advice, please seek out a registered investment advisor, broker, anybody that has a license that is legally allowed to give you investment advice. Please seek them out if that's what you need. All right, that should do it. So before we get on to the good stuff here, I know that a lot of you attend regularly, which is great because it's a continued learning process. But for those of you who might be new to the webinar or our webinars in general, I just want to make you aware of the fact that not only do we have award-winning technology and the best scanners on the market, but we've created quite the community around that product. And it's been growing rapidly, been getting a lot of good feedback about it. So it all starts off with the free trading room that is hosted by Trade Ideas, hosted by Barry Anderson. He usually opens the doors there about 30 minutes before the open. Always 5, 4, 3, 600 people in there, give or take, depending on the day. And Barry does a really fantastic job at keeping everyone focused and at the same time touting his plays and showing you how he uses the technology. So if you haven't signed up yet, the best part about the trading room is it's free. You don't even have to be a TI subscriber to participate. Now, of course, today's Monday, and it's always myself, and Steve rides shotgun with me. Steve takes the helm tomorrow for the trade of the week. And boy, what a trade of the week it was today, Steve, huh? Kind of a nail biter.
Kind of funky. We'll talk about it. Yeah.
And of course, Andy rides shotgun with him. In the middle of the week for Hump Day, we get Dan Merkin and Brad Williams, the CEO and the CTO, in there giving you their take on the platform and their trading styles. And then we round it out with Andy on the trading studio, which I ride shotgun with him. And because we're super nice, we give you Fridays off. Of course, what's not on here is the new standing 3-hour webinar, which we're hosting every Friday now. And Steve, correct me if I'm wrong, but I think it's 8 to 11 Eastern, right?
8 to 11 Pacific. So, yeah. 11 to
Eastern. Yeah,
we're going to have to update those slides.
So we've got a bunch of good stuff, ladies and gentlemen, with the webinars, the trading room, the new webinar on Friday. So if you have not been taking advantage, that Friday webinar is a great place to hop in and just ask about anything that you would like to about Trade Ideas Pro, Holly, or anything. All right, on to the good stuff here. Of course, Steve, if you're ready, I'm going to pass the baton over to you. Let you
sure.
Tell us what's been going on overall.
Yep. Let me find my bearings here. Screen 1. Okay, you guys should have a view of big, giant SPY chart. Zoom out just a little. Oops. Let me get all of our data in there. Zoom out just a little bit just to remind everybody that this bottom support trend line has been doing its job and then some, keeping the spiders bouncing off of this trend line for the most part. And then, wow, just a face-ripping rally, which last time we spoke, I know we didn't meet last Monday, it was a holiday, but in the trade of the week, we had these two little doji days here, little green days, and I mentioned, don't be surprised if in the early morning going, real coming up close here, the sellers might not try and make a stand. Let me zoom in a little bit more to fill this little gap right here. That little gap was not only a gap, but it was also prior resistance. So it was just itching. It was just begging to become prior resistance equals current support. Add that gap in there. That's a second reason for some price action pullback. And what do you know? Exactly tagged it perfectly. And then the buyers stepped in just like they do and give us that bottoming tail. By the end of the day, the buyers had pushed this market right back up after, in my mind, completing a nice 3-day pullback, gap and fill, back and fill, whatever you want to call it. It made perfect sense for this market to do that. And then a couple of really nice days higher, which brings us to today, which is a day of rest. Pretty much a perfect doji by about 3 or 4 cents, I think. I'm not sure. But whenever you see a real tight spinning top doji with a small wick on the top, small wick on the bottom, and pretty much closed right where we opened, this is a symbol or a way of letting the market know that, hey, there was no winner today. You know, Thursday and Friday, the winners were the nice broad-based rallies and the bulls. The winners today were nobody. This was like a stalemate on a tug-of-war. So what happens is when you see a move like this, really aggressive move off all the way down here off of that prior gap fill and prior resistance, 3 big days of push, this could very well easily become a continuation pattern, or it could become a bit of a day of rest and we need a bit more rest. So what I'm saying is, you know, it's probably not a bad idea. Let me put my crosshairs on here just, you know, to show you guys as I zoom in. You know, Andy and I have talked a lot about this over the years, but when we see a doji day like this, it's the very next day is really kind of, you know, predicated on which direction are we breaking out of. So I'm just going to go ahead and put some orange lines in there. And I would use those orange lines tomorrow for direction. You know, if we take out today's doji high, we may have some continuation. If we take out today's doji low, we may have some give back. So just keep that in mind. You know, it's years of experience and staring at charts that, you know, kind of gave me that feeling and reason to say that. Again, we've had a really nice bounce off that trend line. We'll see where we go from here, but today was a day of rest in the SPY. What about the Qs, the ones that have been dragging us higher? Well, interestingly enough, I guess the algorithms are on the same office space there. A day of rest here in the Qs after some upward movement, many multi-days. So, you know, I won't draw the line, but same thing goes here. The bottom of today's range, the high, today's high range. Keep yourself aware tomorrow of price action if they take out today's highs or today's lows, because typically these dojis can signal possible trend change or possible continuation. We just don't know. We have to let the market open tomorrow and see which side of the coin the buyers or sellers try to assault. The Dow is pretty much the Dow is also a doji. What's going on here? It's almost like a concerted effort. Everything's a doji today. Same in the Dow. The IWM, though, however, just can't get out of its own way. Everybody else put in a doji, but the IWM just went and fell apart and basically fell back to lows. This is the Russell 2000. It's been convoluting a lot of people trying to figure out what this thing wants to do, but it's basically been just a mess since late January, early February, back and forth. It can't really find its way out of its own ranges, you know, and then dips again. And so IWM definitely the lagger, which would probably make sense as we talk a lot about the NASDAQ and the S&P with 5 or 6 main stocks and their giant weightings driving these indexes higher, and Microsoft, Amazon, Google, Apple, Tesla, I'm sorry, Netflix, and so on and so forth. So what's happening is on the smaller IWM, these are all smaller cap stocks, they just can't get any traction. And so that's really been the story. Leadership has been by tech, by a few companies, and those same companies still kind of bleed into the S&P as well. But nothing but dojis all the way across the board today. So keep an eye on today's high, today's low on those dojis, and might give us an early indication tomorrow what direction we could be going, continuation or time for pullback. Just real quick, Jamie kind of teased you guys with the trade of the week, and I'll talk a lot more about it tomorrow, but we were looking for a buy pullback here off of this nice candle, a nice hammer bounce candle, and it was bouncing right off its 50-day moving average. Well, it's an oil stock, it's an energy stock, and the play of the day was to just buy at the open. And, you know, we anticipated we have an open around here at 53.22 or so, but we didn't. We had a gap down. However, I just wanted to call out that the bottom red line there, that's the 51.40 level that we called out as on the short. So essentially, this trade of the week is a 32 cent risk. I mean, it opened at 51.71. Our downside stop is 51.40. We got within 3 ticks of that, I believe, this morning. And let me just show you how I came up with 51.40 as a stop. You can see right here, this is another gap that was basically filled by today's action. There was still a little bit of gap action going on back here that wasn't filled by Friday's candle. And so we had a gap down overnight. We did fill the gap. And so in putting the stop loss, you know, we don't want to put it right there at the top of the gap. You know, these price actions have a tendency to overshoot. So, you know, it overshot that gap by about 10, 12 cents, and we're protected down here at 51.40. So the trade is open, and it is what it is. I would continue to use the 51.40 stop, but in this case, we're really only risking about 30 cents to try and maybe get this thing to bounce. Let's look at the bigger picture. Get this thing to bounce back up over numerous days and create higher highs and higher lows on a trend here on the daily. So, you know, usually or not usually, occasionally we'll have a trigger. You know, if the stock trades above X particular price on the trade of the week, then the trade goes live. But that's why it's important to read every word of the trade of the week. You know, we break down the reasoning and the entries and the exits. The entry was to buy on the open, so the open was essentially right here at 51.70 or so, 71. So we're going to risk 30 cents to try and make a couple bucks, and that's that. All right, Jamie, I'll send it back to you if you're ready.
I am ready as soon as I could locate my mute button there. Okay, tell me when you have eyes back on me.
Today's class.
All right. Well, thank you very much. That was good stuff. Good stuff. Yeah, everybody's closing on a doji today, which, as you said, typically means something's going to happen, but we don't know the direction. But typically, it is in the current trend. It's kind of like on an intraday when we see that in our 7 pattern, that tight little coiling. It means something's going to happen. Doesn't necessarily mean which we can't verify which way it's going to go, but you know that potential energy could very well turn into kinetic tomorrow. We'll see.
Yep. Chance favors the prepared mind, so just keep an eye on those highs and lows from today into tomorrow's action.
Absolutely. Okay, so rather lackluster day in the market, and just for reference here, where did my top list volume window go here? You know, check out how we closed here today with all the major indexes. SPY turning in 0.65 on the relative volume, 0.77 and 0.89. So all significantly below volume, but the biggest low volume guy here was definitely the SPY. Of course, we never knew what was going to happen before the day started. However, with what we're going to talk about today, there were a lot of things that told us what to expect. And, you know, as a lot of you who attend the webinars can remember, not only do I like to talk about setups and keeping things simple, as well as talk about Holly, which we're going to in just a moment here, but it's about identifying and then getting a good read on how the day might play out. Is it going to be a day like today? Is it going to be an aggressive day like we saw last Thursday? And there are footprints that all of this data leaves in the opening 15, 20, 30 minutes of the day that we can key off of. And, you know, the more I use these techniques, the more and more little subtleties I'm able to zero in on, which are relatively simple here. So we'll get into that in the second part here. But let's talk about Holly first. So low trade count today, 11 trades. Pretty much it was 9 all day, and then at the very end, the power hour short kicked out 2 trades, which you'll see didn't do terrible, but didn't do real big things either. We had a lot of statistical noise through the day, and the profits ebbed and flow. However, we did have one that is what I like to call a 3-star trade, and we'll get into the details of that as well. So without further ado, let me just get to the right page here. Now, Steve, can you see my whole screen? I just want to make sure I'm not having that formatting issue.
No, you're good. We see everything.
Perfecto. All right. So here is the starting team that Holly showed up with for today's session. We can see Not a huge trade count, but on a day like today, that's kind of in line with expected performance. So let's first focus on the risk off chart, which we can see a couple days last week, like Thursday, for example, we didn't have any of this negative, positive, negative dance, and then finally a positive catch. You know, we just had green right off the bat. But today is a little bit different. And of course, risk on obviously was not the path to take today. You can see there's that little dance, negative, positive, negative, peaked out up here for right around 2 points at the most, but then quickly gave it all back, and then we continue the little negative, positive dance here. So risk on today, not so bad. Risk off, not.
Yep, you got them reversed.
Excuse me, risk on, not the way to go today. Risk off, posting a $1.14 on.
When you look at the risk on histogram, it kind of looks like the spiders today. The spiders crossed above and below the unchanged line, I think 5 or 6 times today.
Yep, and there's a lot of mimicking, and in these charts we're going to take a look at later, you're going to notice the same thing. If you're in the money and you didn't take that money, a lot of the times today, you're back flat. But there were some that caught and continued, and on a day like today, those stand out a lot more than, say, a more bountiful day or a day where there was a lot more game to be hunted. Today was pretty sparse, and I think everybody will agree with me on that. So let's just take a look at some of the Holly highlights today. So let's just talk about this one right off the bat here, because this is going to happen from time to time, ladies and gentlemen, especially with a model like this that's looking at the whole market and trying to filter things down into liquid tradable securities. And this, you know, usually hasn't happened in a while, but I do want to address it. So Ascend is showing a $1 risk off profit today. Risk on, if you held it, you can see the profit would have eroded, but let's talk about the liquidity, because most of the time there's enough liquidity to get some shares off in these stocks today. And this one, if we're looking at the dailies, 146 today, 50. So it's a relatively low volume stock. Now, I didn't trade this one specifically myself today, wasn't in the chair at the appropriate time, but we can see in this 5-minute candle here, we did have, looks like right about 100,000 shares traded, but then followed up by 1,000 and then a gap up into this area here in the next 5-minute bar. So I can't necessarily say there was enough liquidity or there was not enough liquidity since I didn't actively engage it today. If somebody did trade it, let me know about it. But I just can't say if it would have been hard to get filled in this candle. Steve, I don't know if you were watching the level 2 at this point in time, but you know, it was heavy volume here, heavy volume here. Was it tradable or not? Don't know. Every once in a while this is going to happen. One of these guys is going to sneak in here. So doesn't happen a whole lot. Just kind of wanted to address that here. And then talk about ICHR today. Because on a day where pickings were very slim today, to see a play like this, I mean, this was a day maker if you know what to look for. And the methodology that we're going to go over here, everybody that attends regularly, you're going to realize what's going on here. Hopefully you might have even let the trade unfold like what I'm about to point out here. So Holly delivers the buy signal on ICHR 805 in this candle right here. And of course, you might notice we've got the new little blocked out letters here for the AI trades, along with the shading that we've implemented. So now we don't have to squint our eyes to see where the AI entry is and the stop loss. It's all clearly defined for you, being the Google roadmaps of the stock market right here. Makes things nice and simple. Here's your entry. If things go south, here's your exit. Here's where the stock's currently trading, so forth and so on. Now, if we squish the chart down a lot, sometimes we can even see the profit target. But looking at this entry here, just a beautiful statistically weighted entry. So, you know, I was saying earlier, this is what I like to call a 3-star trade from Holly. First star, It's got statistical weight behind it. Quarterback, which is one of the frequent participants in the Holly Combine, 62.5% right off the bat. So we get the signal. We know right off the bat we've got 62.5% probability, which is very good. Now, as soon as we see this entry here, my eyes automatically gravitate to the previous high. And what I do,
Congestion.
drop straight across, just for easy reference. Yeah, Steve?
I'm sorry, I just said congestion. My eyes immediately go left to where that earlier congestion was.
Right, and then we can see this nice little, it's not the tightest, but it's not real loose either here, but a nice little consolidation area, a little sideways action. Then Holly says, hey, statistical weight's in our favor. Then I notice it's right before a range break. So when you see that, and you see it's right before a range break, which happens to be my favorite pattern due to its simplicity and the ease at which you can get used to identifying this pattern. Draw the straight line. When it breaks out, penetrates that level, that's a range break. So Holly calls it before the break. Because of my familiarity with this, and hopefully yours too, we can see that this will make a great second entry as soon as it penetrates that level. So that's what I like to call gold star number 2. We've got statistical probability coupled by nice clean range break here. And then after it goes and it starts popping this high, well, then it started coming across one of my turbo breaks up tickers and exhibiting extremely high 1-minute volume. So that, ladies and gents, is what I like to call the third star. Holly play, statistical weight, perfect little range break here. Then boom, as soon as it's out of there, boom, 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 coming across my other alert windows telling me about the crazy 1-minute volume that's going on. So you see how those 3 aspects lined up perfectly on this trade. And can't say they don't happen frequently. You know, there might be 1 a day, 2 a day if the market's real busy, but on a day like today, where the markets were pretty much asleep, to have a play like this brought to you and have these 3 things all unfold, that was a really, that's a day maker right there, ladies and gentlemen. You know, you could have easily been in twice your lot, and then your third lot saw it as soon as you saw the heavy volume accompanying that range break. So whether that's 300, you know, 1,000, 600, it's different for every person depending on your account size. And then of course, it's always beautiful when it never even gravitates back down to the entry line, because statistical probability that Holly generates, it's always good for the day. And for those of you who've been in the chair watching Holly for a while now, you know that they don't always work out like this. Sometimes they'll hug that entry line and pass back and forth through it 2, 3 more times before they finally catch. But if you can get used to stringing these things together, nice pattern, and of course the pattern can be any other type of pattern that you choose to engage in, or it's your favorite pattern. This one just seems to be a very simple one, and we see these types of plays from Holly all the time. So the next time you see the one like this where it's just short of a nice range break, it should click. Ah, I remember what Jamie said. This could be a good one. And then if it pops out and kicks in the high volume, then you know you have something that you should really be quite aggressive on, because that's one of the harder things, whether you're a seasoned trader or a new guy trying to learn these things. When do I add? When do I add to a position? You know, I'm already in it. I'm in the money. I kind of hate to add to it, and that's just a common tendency that we humans have. But once you find out when to add to the good ones, based on what we're describing here, it becomes second nature.
Hey, real quick, Jamie, somebody asked the great question of where can I see a quick description of the strategies, and Scott sent them a link, so if you're curious, in the question box there, you'll see that link. But the second part of his question is, and I'm sure there's a few people still scratching their heads, is what is risk on, risk off, if you just could take a second.
Absolutely, and once again, this, hold on one second, my questions box disappeared on me, so I'm just trying to pull it back up here. There we go. Okay. So risk on, risk off. And I'm glad that question was asked because it seems to be a confusing topic for people, but typically only when they're kind of new. And what you don't have to do with risk off and risk on is pick one before the market opens and then go, okay, I'm going risk off or I'm going risk on. This is simply designed to show you if you're engaging in the rule set that Holly is and getting out with your stop losses, profit targets, in other words, obeying your rule set, that's risk off. Risk on is simply showing you what would have happened had you held the position to the close. Now, don't even worry about picking one. We can address that on a trade-by-trade basis. So this is the perfect example because ICHR, we can see Holly, and let me just put a little divider in here. Okay, so risk off, Holly entered the trade at 8:05 a.m. Pacific Standard Time, and she only stayed in it for a little over 5 minutes. You see the green area right here, the dark green, is Holly's risk off entry and exit. Notice how the box gets lighter green. That's risk on, okay? So Holly, we have to give her the ability to exit a winning trade because we don't want her letting a winning trade turn into a losing trade. That's bad. Now, she's not the best at exiting, so she's basically using a different version of our version of a trailing stop. If she's in the money and it pulls back a certain percentage of the profit and a certain amount of time has passed, then she will exit that trade, and we can see here the exit reason, profit save. She's not willing to let this profit go at risk. She's going to book it. Now, if you were watching this in real time today and you're like, okay, I see Holly just closed out the ICHR trade right here. I mean, as soon as she got in it, we're in the money as soon as the call is made, and she's like, I'm taking my money. We're like, okay, fine. Now, from a trader standpoint, of course, is there really any reason to get out of the trade? We've got our risk clearly defined right here. That's what stop losses are for. In case we're wrong, this is our maximum exposure. Now we can see it never even acted like it was going to go down there and tempt it. But Holly's like, I'm not letting the green turn into red. I'm taking my money. So at that point in time, we go, you know, I respect Holly for what she's doing, but I know that her strong suit is not her ability to exit a trade. Holly's superpower is delivering statistically weighted entries to us. So we're a lot better most of the time at picking exits because we can read the charts, whereas Holly can't read them like we do. She sees things in a different spectrum, like a shotgun pattern. But when we see something like this, and then we see the range break occurring, and we're in the money, and the thing's just in this second candle here, if we do not feel that we should exit with Holly, we think there's more in the trade, then we go, okay, I'm going risk on this trade, meaning I'm staying in when Holly's getting out. Now, of course, the easy way to get over figuring out how to do it is to do a little bit of both. And then as you get more and more comfortable with the process, then you can lean more towards risk on or risk off, depending on the setup. But a perfect example here is if you popped in the 200 with Holly because you liked what was going on and the statistical weight and all the other attributes that we discussed earlier, you're in 200 and you see Holly getting out. Well, by all means, get out half of your position with Holly and let the other half ride risk on if the chart dictates it. Now, one other thing that we can kind of take a gander at here.
I was just going to say that.
Yep.
You read my mind.
All right, so Steve, Andy, we all talk about, all right, once we're in the trade from a good intraday setup and the thing's moving in our favor, whether it's a Holly trade or a trade that we generated from one of our other trade ideas windows, okay, we're in the money. That part of the equation's over. Whew, we're in the money. Now, I sure would hate to get out of this thing for 50 cents if it's going to go higher. So how do we temper our expectations? Well, we look at the daily. This is the daily chart on ICHR. when I'm looking to the left over here, what's there for it to bump its head into? All right. If we were way back here trading it and we looked left, there's all kinds of things, all kinds of lines we could draw for support and resistance. But guess what? Since this stock is at all-time lifetime highs as well, it's in uncharted territory. You know, there's nothing for it to bump its head on when we're right. You know, that's the close today. Don't see anything over here. So when you make a good intraday entry, whether it's Holly or anything else, that's what we do. And especially if once we saw these nice little setups and all these other positive attributes, and then we look over here immediately and go, ah, okay. Because you see what happened right here? Notice how this little congestion area is daily, right? But notice how it looks identical to what we're seeing on the intraday. Intraday 5-minute, daily. Well, just like this is a range break here, crack, this is also a range break out of that congestion area. It's just on a different time frame. Thus the beauty of the pattern, what we like to call fractal, right? Can occur on any time frame. So I know I got a little off tangent there, but therein lies the difference between going risk off and risk on, and tempering our expectations on how much run this thing might have in it. And looking at the way ICHR closed today, just, well, that's post-market right there. So we closed just a little bit off highs. Definitely might be another good
for tomorrow.
Watch for tomorrow, because if it looks good on the you know, on the open, blah, 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 and you can get a decent risk in it, well then definitely want to keep your eyes on. Okay, just real quick here. Let's see, just checking out the questions, making sure nothing. Let's see. Yes, Luis, this is the same software that Ross uses with his students. All right, so any more to talk about Holly? You know, when we start looking at these risk off versus risk on today, you know, generally the idea is to capture somewhere in between here. We might not get all of it for risk on. We'd like to make more than 19, so anywhere in between the spread between risk off and risk on is our potential alpha. So we can see here there's only like 7 cents extra, 15 cents extra ascend. We've already talked about that one, whether, you know, depending on the candle you traded it in, hey, there's probably liquidity there. And, you know, whatever the level 2 may have looked like to give you a little bit of a confidence as to the liquidity levels. But everything else is pretty uneventful. We can see that, you know, taking those losses early on with Holly was definitely keeping us from taking any bigger, you know, 89 cents, 74 cents versus 15 and 20. So all in all, Holly up $1 on that many trades, or even if we completely remove the ascend trade, flat on a day like today, while at the same time producing something like ICHR, really about all you can hope for from a statistical model today. And as I said, once you get used to identifying these patterns and, you know, tacking on 2 or 3 positive attributes together, those can be the ones that can be big, and you can go into them with confidence because you have that information behind you. So yep. Steve, anything to add to the Holly?
Just keep looking left. If I only had one chart to use in my life, it's going to be the daily chart, and I'd have to use everything off of that. That's where it all starts. I can't really just look at an intraday chart and get a bigger picture as to where the price action is or where it could be going without seeing it. So, you know, I need a daily chart, and I use a 15-minute chart. Jamie uses a 5, I choose 15. But the first nod is always going to go, in my book, the first nod is always going to go to the daily. What's the daily looking like? And then drill in from there.
Right, and you can see I just flipped over to 15, and these look pretty much the same, just personal preference.
Exactly.
Okay, so, you know, I'm glad we're on this topic, Steve, because let's take this one step further. You know, in a market that is constantly uptrending, we always talk about the path of least resistance, keeping it simple with nice powerful metrics and an AI on your side, and then keeping things simple. So since we're in this gravitational upswing in the market, I kind of started thinking about it because everybody knows I like to watch my turbo breaks up and down for range breaks. And then not too long ago, I started looking at only stocks with a market cap of 5.4 billion because, well, they're nice and liquid. Shows me things that are, in essence, bubbling up underneath the surface. And I used this analogy in Andy's trading studio last Thursday, and that is, if we think of the market as a volcano, when scientists study volcanoes, they study what's going on in the volcano, way beneath the volcano. And based on what's happening underneath the surface, they can predict, well, you know, hey, Mount St. Helens started getting frisky again. Well, we all know what happened back in the 80s, I guess, with Mount St. Helens. But they have a lot of lead time. And the point I'm trying to make is they pay attention to what's going on the surface or underneath the surface. Therefore, they can make accurate predictions. Well, everybody better evacuate because this thing's going to pop its top and you're not going to want to be around. And the market is very similar. And what I mean by that is after I started noticing, well, the market's going up. We all know there's a funky weighting on the Qs with the 5 tech companies that are, you know, slinging that average around. But how can we figure out what's going on underneath the surface in order to have a better idea at hypothesizing what might happen in the future and have better than 50-50 odds or better odds than a coin flip at that coming to fruition? So after I started watching stocks of market cap greater than 5.4 billion, I'm like, well, I bet there's stocks with lower market caps doing the same thing. But where do I start? Do I just look at above 5.4, below 5.4? So what I've created, and by the way, this is a window that all you guys can take home with you today. I'll post it in the chat area. But what I've done is I've created a multi-strategy window. And I've broken it down into market caps. So what you're going to see when you peek in here, it's the same configuration, but stocks above 4 billion that are in their lifetime highs, between 2 and 4 billion, and then sub 2 billion. And of course, once you get this, you can slice it and dice it any way you see fit. You know, you want to get a lot more specific and go 1 billion per click, you have the ability to do that. So what we're doing is we're eliminating long-term resistance right off the bat. So every stock coming through here is going to look similar to ICHR. When you look to the left, there's not going to be anything because that's one of the requirements. The stock has to be in its lifetime high. You might be able to say it's a companion alert window for this top list, which is the pack leaders. And by the way, when I first developed this window, probably, I don't know, 2-3 months ago, there were only a few stocks on it every day, maybe down to here. And this morning, it was only populated down to here, but by the time the day drew to a close, it got a lot bigger, significantly bigger. So if we're a volcanologist trying to peer under the volcano that is the market, and we see this list on a day like today, that's interesting. Especially when we closed on a doji, which tells us, you know what, can't guarantee what direction we're going to go. But something's probably going to happen. Okay, well, all right. We don't want to base our decision just on that doji candle, but we take what it means and we parlay it into what we're seeing here. Could be interesting. So the nice thing about this is when these guys come up, we're just pulling them up and we're looking and we're seeing if we find that nice little range break pattern. So what I did today, and in an effort to try and illustrate these so that people can go back and reference them whenever they'd like to get a better feel, what I've done is I've started tweeting them all out. When I see a nice tight range break, like for example, here's one today, right as they're happening, I'll tweet it out, all right, so that whenever you have the time, you can go back and review these and go, oh, okay, I see what's happening here. We're popping out of that range that he was talking about here, and we're doing it on high volume. Otherwise, it wouldn't be coming through this window right here. And that brings up a good topic. As traders, what are we looking for? We're all looking for that specific animal or chart pattern that we like to trade. A lot of people get so excited when they find their chart pattern. They fail to realize what the volume levels are. And today's a really good example because it's like, if there wasn't any action in the market, therefore we could extrapolate, you know what? There just wasn't a whole lot of institutional selling and buying today. The institutions weren't out there buying and selling like they normally do. Therefore, So you see, what if we eliminate the volume aspects right off the bat by creating a window like this where the only thing that's coming through are stocks doing high volume, and then look at those symbols for the animal or the chart pattern that we're hunting. That just sounds like a much more logical way to go about the process, because not to sit here and tell you that things won't go up on low volume and moves won't occur on low to moderate, slightly above or below volume, but the odds of it happening with higher volume are greater. And remember, we just want to get away from the 50-50 and improve our odds from there. So without going through all the history here, just wanted to show you that even the stocks with the volume today, for example, ALRM was a nice range break that was produced by this little group today right here, right about here. And of course, this one continued for most of the day. And of course, I thought I think when I respawned my software, all my lines disappeared. Yeah, that seems to be what happened. I had to log out and log back in. I already had these charts marked up. But
I hate that.
Case, I know. My bad. I didn't have my Webby webinar layout open when I was marking up my other charts, and oh well. But we can see here. OLED was another one of these breaks that continued all day. And all these symbols that I'm showing you came through these exact tickers at these exact times today. Of course, next time I'll remember switch layouts before I mark up my charts. But a lot of these folded back over during the day. So for example, let's see, that one kept going. Johnson & Johnson, that's one that stuck out because this range break right here looked nice and clean today. And out of all the ones, this was probably the one you were least in the money on today. So a lot of these would run up and then they would come back down. But then again, you had your DRIs, your OLEDs, your MasterCards that ran all day, just like your ICHR. So the bottom line is this. It's all about expectations. If we see Holly, and I'm trying to tie all this together here, so bear with me. We see the statistical model having a tough go at it. Negative, positive, negative, positive. We're watching some of our other windows, low volume. We can see, you know, the SPY was never even, you know, it was at 50% of relative volume most of the day. And then we start to see, okay, on things that are perceived to be institutional buying, they're starting to go, whether it's here or again up here, would have been a good signal. Oh, it's starting to go again, but if you didn't take them, they're all retracing back to the entry levels here. But the bottom line is, on all of these plays today, I'd say on 95% of them, you would have been in the money. And then if you're using proper risk management, you could have still taken something out of everything, because through repetition here, you would start to see, okay, out of these 20 things that Jamie tweeted out, after the second and third ones, I noticed that they'd make a nice little run and they'd pull back. They'd make a nice little run and they'd pull back over and over again. And then of course, a couple of them actually stuck and closed higher on the day. So if your stop never got hit, if you're using a trailing stop, you were able to stay in that stock longer today. And on a day where things were pretty hard to find, there were a lot of good opportunities here. And since I screwed up my charts, you know, if I just kind of gently scroll through here, COO was another one that moved up nicely. But if you didn't take your money up here, they all marched right back down to that entry level. So quite a few to look at. I remember when W, and a lot of these guys are repeat offenders from the prior week. And every time I see W, Steve, what's the first thing that jumps out in your brain when you see W?
Two things. All-time highs and high short float.
Yep. So Wayfair, by the way, ladies and gentlemen, look at that short float. Look at this daily chart right here. I mean,
that's rule number one of what not to do if you want to make money in the market is to sit there and go short stocks that continually make all-time highs. It's not advised.
Right. If I was short W right now, I would not sleep very well at all. Let me just say that. And so, you know, the cool thing about these plays is they can happen at any time of the day. You know, Tesla was another one that was just on fire today. And of course, time ran out on it. But, you know, when you start to see things like this and a lot of patterns like this, that's looking under the surface. You know, we're using this window. We can use this window in so many different ways because when the market is open and we're sorting by position and range and we're thinking to ourselves, okay, these are the pack leaders. Maybe I want to try to, you know, find a couple of range breaks that haven't occurred yet so that I can use my price alerts. So you start targeting the ones that are close to their high but not quite there. And of course, nice big wick kind of ruined everything for PM today. But if you're looking at this list while the market is open, and that's how you should use it, as soon as this list starts populating, you find the ones that are close. If you can find the nice patterns, you start marking them up and going, okay, if it breaks out of this little range right here, I want to know about it. Or if you're a stickler and you want to play the bodies of the candles for the highs, there's another one. If you're a stickler and you want to play the wicks, well, you got to use that guy up there, in which case not as much opportunity, but the name of the game is the same. So I will drop pack leader top list and the companion window, which is the multi-strategy window, into the chat area real quick here.
All right. So if you want to pick up a copy of the cloud that he's going to paste into the chat window, it's on the GoToMeeting, GoToWebinar toolbar that everybody's got floating around there, and there's one little triangle next to the word chat. If you click that triangle, it'll pop open the chat mini window, and you'll have access to the cloud link that he's going to share with you on that multi-strategy window that basically broke down those different alerts by market cap. There it is.
Right, and everybody just keep in mind, I've just got some nice, simple ranges for the market cap. Above 4 billion, between 2 and 4, and below 2. So just keep in mind, the below 2 billion can spit out some thin stocks from time to time. So if you want to go in there and put a minimum of $1 billion on there, 500 million, you can do that. I prefer just to leave it open because as soon as I see something like this, I'm typically, okay, not my bag, rather than try to throttle it down too much. So let me get this guy in there as well. All right, so the pack leader top list should be in there along with the accompanying companion window. And, you know, I would highly recommend that you just get that one up on your desktop. Instead of having to watch 3 windows, you only have to watch 1. And you should find it very interesting, to say the least.
Don't forget to save it to the cloud. If you bring it up once and then you close your layout without saving to the cloud, you'll have to get it again.
Absolutely. So, Steve, I think we got about, what, 5-6 minutes left. So anything to add before we bring Mr. Scott back to the podium?
I've seen a few newbie traders in here talking about, where can I get some information on how to start learning how to trade. There's a lot of good resources out there. Jamie just showed you a couple of really nice tweets in his timeline today to kind of show you in real time. So at the end of the broadcast, his Twitter handle is @QuantBot. And probably wouldn't be a bad idea to follow him, so in real time tomorrow or the next day you can start to see some of the stuff that's coming in real time. If you follow the right people on Twitter, you'll start to get a good feel for stuff. Beyond that, the only advice I have for newbies is just please be patient. Know that you're not going to start turning profits very quickly, no matter how smart you are and what business background you came from. It's going to take 4 to 6 months before you start to see the forest through the trees. So whatever you do in that period of time, whether it's some paper trading and some small lot trading, 50 shares, 100 shares, make your mistakes cheap. Everybody pays a tuition. It's just a matter of how much tuition you want to pay. Is really up to you. So use those first 4 to 6 months. If you're a newbie trader just starting out, there's so much to learn. There are so many mistakes to make. You will make mistakes, but the idea is to try and make those mistakes as cheaply as possible. And before you know it, things start to fall together, and you start to create something that works for you in a risk tolerance environment that works for you. But it doesn't happen overnight. I love giving that caveat to new traders. Please, it doesn't happen overnight. It takes a lot of seat time.
Well said, Steve. Well said. It's like Wayne Gretzky said, half the battle's showing up, So just by watching trade ideas in your favorite windows along with Holly.
Learning how to read charts.
And hey, it's not easy. I mean, I reflect back to 20 plus years ago, and, it's not the way we came into
puzzle.
Put
together.
It is. And so, learning to read charts is half the battle, but with a little repetition, it's not rocket science.
And some help for trade ideas, pointing us in the right direction, makes it a lot more efficient.
Absolutely. And Steve hit on a really good point. The last thing you ever want to do in the trading world is be in a hurry. Because guess what? Hey, the market's not going anywhere. It's going to outlive all of us. So just keep in mind, it's there every day. And today was a really good example, because I always say, these plays that we went over today with the range breaks and the high volume, they're there every day. Busy day, slow day, sideways day, up day, down day. Today was a really good example of the flow being manageable and being able to just sit back and go, oh, there's another one. Oh, there's another one. That one looks good. That one doesn't look good. It's just a game. And the more you practice, the better you'll get, unlike my golf game. Okay, Scott, so if you're in there, we're ready for it.
Okay, thank you. Thanks everyone for joining us. Just a couple little items on the way out, including your promo code. But first, we do have a podcast. The most recent episode was really good. We had Trade Beautiful as her Twitter handle. She's a young lady from Dublin, Ireland. She what's her name? Leanne Jones on, and it was a great episode with Dan. Check that one out. Just go to your favorite podcast app and search for Trade Ideas Podcast. You can grab that. So far, it's been a pretty popular episode. Let's see what happens with it. We also have all of our archived episodes up there as well. Typically, it's Dan and Jamie, but we do have guests every now and then. Brokerage Plus is our module that lets you automatically trade using Trade Idea strategies directly through your Interactive Brokerage account. Currently, it's only for Interactive Brokerage clients. However, we'll be adding more soon, so that's accessible through any of the beta versions, 4.0.122 or newer, and I think the newest one up is 0.136. You can just add that if you've got an Interactive Brokerage account. Contact our support for help setting it up. We've got a couple of YouTube videos on our YouTube channel about it too. It's really cool, so check it out. There's a code this month that's GRAIL, all caps, just like it is on the screen there, and that saves 15% off your first month or year of Trade Ideas. So you can even use that for Standard, to save off your first month or year at Standard, or you can use that to upgrade from Standard to Premium, or jump right into Premium and get access to Holiday AI. But both Premium and Standard include a full hour of one-on-one training. So once you become a subscriber, just go to the support section, click on training, and reserve your preferred time and date for that. Now also take advantage of the trading room and all the webinars. We were talking about that earlier. So questions should be sent to info@trade-ideas.com. That's the best email address for most questions. The 619 number is good for billing or account issues, but again, your question should go to info@trade-ideas.com, or you can reach out to Jamie or Steve directly, jhodge at or steve at. Facebook.com/TradeIdeasPro is the Facebook location. Go ahead and like our page there if you're on Facebook. That way you'll see some unique things we post there, and you can share that out with your friends. Follow Steve at Today Trader on Twitter. Jamie is at QuantBot, and Dan Merkin is at TradeIdeas1. We also have at Trade Ideas and a handful of other Twitter handles, but those are the most active ones, the three you see on your screen right now. Thanks everyone for joining us. The recording will be up a little bit later tonight. You'll get an email reminder tomorrow about where to find that in the playlist. And thanks, Steve and Jamie, for the prezo. We will see Steve tomorrow night.
See you tomorrow. Yep.
Trade of the Week webinar. If you're on the Trade of the Week mailing list, you'll get an invitation for that. And we also have other webinars this week, including the QA demo webinar with Dan and Brad on Wednesday, the Trading Studio on Thursday, and then we have a morning webinar that's open forum for support on Fridays. It's a new thing, so keep your eye open for the invite on that. Those invites will be going out the day before each event and again the day of. So thanks all.
All right. See you then.
Thanks a bunch, everybody. We'll see you tomorrow. Bye-bye.